Hello everybody and welcome back to G&D Investments. Today we're going to be looking at what the biggest investors are buying on a website called Dataroma. Warren Buffett is the chairman of Berkshire Hathaway and manages a portfolio of more than $300 billion and is one of the best investors of all time. His top 5 investments include Apple, Bank of America, American Express, Coca-Cola and Chevron. As we can see, Mr. Buffett is invested just over 46% of the portfolio into Apple alone, with just under $150 billion invested. The main reason behind this investment is that he views Apple to be more superior than any other business out there, and also because of their enormous stock buybacks. The tech titan stock buybacks boosted Berkshire's ownership from 5.4% at the end of 2018 to 5.8% today, without Buffett and his team having to spend a dime. The final reason is that he feels confident in where Apple will be in the next 5 to 10 years, whereas other industries he is unsure, such as the auto industry. Buffett also owns a company called Activision, which is what we call a risk arbitrage play, in the sense that Microsoft put a bid to acquire it at $95 a share, which is valued at around $69 billion. Buffett bought Activision at a reported price of $85 per share, so if the deal does go through, which was actually confirmed not too long ago that it did, Buffett will pocket the difference, which will be 11.8% increase from where he bought it. Mohnish Pabrai is another great investor, and was considered to have cloned Warren Buffett in the sense that he looked at everything Mr. Buffett did and copied it. Mohnish runs a portfolio of up to $121 million, however this is just his US investments. Mohnish also loves investing widely into India and other emerging markets. One of Mohnish's biggest investments, as we can see, is Micron. Mohnish explains in an interview briefly that he invested in Micron because prior to its boom and busts, it was a very wide-spaced industry with lots of poor management and decisions being made. However, now we are in a unique situation of there only being 3 players left, and that he believes all 3 players are rational and make good logical decisions, and will do going forward. Because of there being a long history of money lost and suffering from the continuous boom and busts, it's left a very good value opportunity for investors to swoop in nice and early, and then when the markets do finally realise what's going on, the price will reflect that, and Mohnish will pocket the difference. Charlie Munger runs a portfolio of $160 million for the Daily Journal, and as we can see is mainly invested in banks, with up to 80.96% in financials. One main reason is that he bought these stocks in the financial crisis at the very market bottom, so they are all gains. Trouble is, in California you pay huge capital gains tax to the government if he was to sell these positions. He actually views California as extremely business unfriendly, and many people are leaving the state one after another. The dividends he is receiving from holding the bank stocks is appealing and almost tax-free, so he sees no reason to sell these positions. Munger also likes banks because it's in his circle of competence. He understands the business very well, meaning he's confident that he can avoid the poor banks that use too much leverage etc. and focus on the banks with sound economics, like Bank of America, Wells Fargo etc. Lilu, which is another great investor, runs Himalaya Capital Management and has a portfolio value of $2 billion. As you can see in every portfolio, there seems to be similarities between each investor. Both Warren Buffett and Charlie Munger own Bank of America, and Mohnish Pabrai owns Micron. This is because they collaborate together on ideas and learn from each other on a daily basis. This is an extremely effective way of becoming successful. Keep smart people around you that you can learn off constantly. Spier manages Aquamarine Capital and has a portfolio value of $193 million. Again, a lot of similarities in terms of what other investors are invested in, but one difference that stands out to me is his investment in Ferrari. Ferrari is, in my opinion, an impeccable business. They have the ultimate moat in the fact their customer relationship is incredible. It is one of the most recession-proof businesses in the markets, due to the fact the waitlist is so long and difficult to get onto, that people on the list will do just about anything to not pass that up. To get on the waitlist, you have probably purchased 4 or 5 cars to make you build up a profile with the brand to move up. Ferrari have now launched an SUV and are expected to sell huge amounts of them, just like Lamborghini did with the Urus, so there will be huge revenue generated in the SUV space. Because the people on their list have huge money and don't want to get taken off the list as it is so hard to get on, having extreme levels of inflation or a possible recession really doesn't matter for Ferrari. They will be making money no matter what. I would also like to point out that being on the list, it means you can make money off getting hold of these cars early and selling it at a gain, which I'm aware of someone that actually does this. So Ferrari has a great system going on, where their customers are happy and loyal to them, and they are happy because they can pump production like nobody else, and having pricing power as well, because like I said, people do anything to remain on that list. However, I myself or Guy Spier are not the only ones aware of Ferrari being that perfect business. This means that the stock price is selling at a premium and currently has a PE ratio of 52.6. For my liking, there isn't enough margin of safety to warrant buying this stock, but it's good enough for Guy Spier, so who knows, this could be a great investment. And having said that, Buffett paid premium for Coca-Cola back in the day because it was an exceptional business. Like Munger said, let's buy wonderful businesses at fair prices, not fair businesses at wonderful prices. In this video, I didn't want to just show you their portfolios and their activity because anyone can do that. I really wanted to show you the most important part, and that's to ask why they invested in these companies in the first place. What made them great investments, and what's the story surrounding the investment? Anyways, I'd like to thank everyone for watching this video, and if you enjoyed the video, subscribe for more content going forward and to stay up to date with market news, investing ideas and the like. It's been a pleasure. Until next time.